Hello everybody, in this video I'm going to be doing a brief stock analysis on Spotify, and this is not by any means going to be any kind of deep dive into their financials, but more so me just giving my opinion on the company as well as the outlook for the industry. One of the first things I like to do is take a look at their 5-year chart, and you can see really for the first 4 years of this, if not 4.5 years, it's really steady, not much growth, and then this year they've really blown up, so really great stock growth for Spotify so far this year. And then you can see here that in March, when the overall market was down, the stock did not really see much of a decrease. And then here in the last few months, the stock has really skyrocketed, really doubled from about $150 up to about $300 almost. It was previously at just $299, with the stock being at $292 now. And one of the things I wanted to talk for a second about is Joe Rogan moving to Spotify. Many people may not know who he is or may not think this is a big deal at all, but he actually has 6 billion with a B views on YouTube, and that's with his main channel as well as Joe Rogan Clips. And he has a multi-year deal with Spotify, and I'm sure they're going to see a record amount of signups when he is exclusively on Spotify. And not only is he moving to Spotify, but I'm sure Spotify is looking to increase their podcast category. And if you couldn't tell, that's what I'm most personally excited about when it comes to this stock. Anyway, going into the next thing, their revenue for the last 4 years has incredible growth year over year, from about $3 billion or a little less than in 2016 to almost $7 billion in 2019. And earnings getting a little bit better as well in 2016 and 2017, seeing a lot of negative earnings, and in 2018 and 2019, it was just marginal losses. And then you can see for the last 4 quarters, really steady revenue and pretty low earnings in Q2 of 2020, but overall they are approaching, if you look at the grander scheme of things, they're approaching profitability. And next up, I wanted to talk about a few points by the Bulls and the Bears, and I think there's a couple of really good points on both sides, such as this first one, this first positive point, which is that Spotify's listener growth may help it negotiate better terms with record labels over time, and that's absolutely true. As streaming services such as Spotify first get started, they get extremely unprofitable and expensive deals with record labels, but they're able to get that for much cheaper than just a couple of years ago now. And then the next point I've already kind of talked about, it's that they're getting into new content such as podcasts and videos, which is going to help them bring in any record number of users as well as new advertisers, because there's new kinds of users, which is just going to help them get more revenue and invest in more kinds of content. So just really a great triangle there for them. And then this next point, I don't know much about it actually happening, but it does definitely have potential to see great revenue for Spotify. It's that by investing in more services and tools for artists, Spotify may attract artists away from their record labels and towards working pretty much for Spotify, and this would allow the company to pay royalties over time. And I think that would really be scary for a lot of artists, but if they could pull that off and actually get a pretty at least a dozen or so really big artist names to do it, then more and more people would catch on and do these kinds of deals, which would be really great for Spotify in the long run. And now I wanted to talk about some more bearish points. This first one being the really big bear in the room, the one that's the really big hurdle that Spotify has to get over. It's that they're competing against companies like Apple with Apple Music, Google with YouTube and Google Play, as well as Amazon with Amazon Music, and they can allocate way more money towards their music streaming offerings and potentially take a lot of users away from Spotify. And that's not even taking into consideration what I would consider their biggest competitor, other than perhaps Apple Music, but their biggest direct competitor, which would be Pandora, which is owned by Sirius. And then these next 2 points I would say are not nearly as good ones. The next one is that content acquisition costs makes Spotify's overall cost of revenue variable, meaning it can change a lot over time, which will prevent them from really improving their gross margins. And I would say if they can get their content acquisition way down, then they're still going to be able to improve their margins by a good amount. So I'm not really sure what that point is really trying to say. And then the last point is Spotify will remain at the mercy of record labels, which is true, but different record labels are going to want to get better deals with Spotify as their users continue to grow. And then lastly, I just wanted to take a look at the research report overview for Morningstar, and they gave it a 1 out of 5 stars, which I think is pretty crazy. I think it's mostly just because the fair value they gave it is 156, which is why they give it a 1-star rating. And I think there's a lot of growth factored into the market price right now, which is why they're so far away from what they would consider their financial fair value. And then I would also disagree with their no economic moat. I would say they have a pretty well-established brand and a really loyal fan base, which would probably give them a narrow economic moat. And then uncertainty very high, as I just mentioned. Really loyal fan base, already really well-established. It's really not very high. They're not going to be going away anytime soon. And then standard stewardship, don't really know much about their top management, to be honest, so I guess I agree with that. Come and check out my channel as I make a ton of other brief stock analysis videos very similar to this one. If you did enjoy the video, subscribe for more content, and thank you so much for watching to the very end.